Oil and its importance. Oil is a resource that powers not only our industries, but also financial markets. From crude prices to stock valuations, oil has a profound effect on global economies. But how does it all connect? Let's explore the relationship between oil prices, the stock market, and oil companies. What determines oil prices? Oil is a raw commodity extracted from beneath the Earth's surface, refined into fuels and other products. Its price is primarily driven by global supply and demand. But unlike stock prices, oil prices can fluctuate based on geopolitical tensions, natural disasters, and decisions by organizations like OPEC. Types of oil and pricing benchmarks. There are key benchmarks for crude oil pricing. West Texas Intermediate WTI is commonly used in the U.S., while Brent crude is the global standard. Though similar, their prices can differ due to regional supply and transportation costs. How oil prices impact energy stocks. When oil prices rise, energy companies, especially in the upstream sector, often see their stock prices increase. Why? Higher crude prices boost their revenues and profitability. However, midstream and downstream companies, which focus on transportation and refining, are less dependent on crude prices. Instead, they benefit from stable demand and refining margins. When oil prices and stock prices diverge. But the relationship isn't always straightforward. Sometimes, oil prices and stock prices diverge. The stock market factors in long-term profitability, not just short-term oil prices. For example, if production costs rise or geopolitical risks increase, stocks may underperform even when crude prices are high. OPEC and its role in oil pricing. OPEC, the organization of the petroleum exporting countries, plays a pivotal role in oil pricing. By setting production quotas, OPEC influences global supply. For instance, production cuts often lead to higher oil prices, benefiting upstream stocks. But sudden decisions can also inject volatility into both the oil and stock markets. Where are the world's largest oil reserves? Regions with abundant oil reserves, like the Middle East, Russia, and North America, often dominate oil production. Companies headquartered in these areas, such as ExxonMobil or Saudi Aramco, are closely tied to their region's oil output and pricing. How oil companies make money. So, how do oil companies make money? Upstream companies profit directly from crude oil prices. Midstream companies, like pipeline operators, focus on steady transportation fees. Downstream companies, such as refiners, thrive on refining margins, turning crude into everyday products like gasoline. Broader economic impacts of oil prices. Oil prices don't just affect energy stocks, they impact the entire economy. Rising prices can increase inflation, raising costs for transportation and manufacturing. This can weigh on broader market indices like the S&P 500. Conversely, falling oil prices might signal weak demand, creating concerns about economic growth. Conclusion: oil powers more than engines. From crude oil benchmarks to stock market impacts, understanding oil's influence on global markets can make you a smarter investor. Whether you're watching WTI prices or tracking energy stocks, remember, oil fuels more than just engines. It powers economies. Thanks for watching, and don't forget to subscribe for more market insights.